Market bounces off of lows yesterday. Is the recent sell-off over? And where are we headed to next? That's coming up on 3 Minutes on Markets and Money. So yesterday the markets opened down fairly sharply in the morning, and this was of course after that really brutal beating that stocks took on Friday. Markets did touch the bottom of the 2 standard deviation band from the 50-day moving average, also retesting these lows back from February and from March. That's actually a good sign, as markets bounced off of that level yesterday, actually went from a negative down over 1% back positive about 0.5% yesterday. That kind of reflexive activity we've seen before near these bottoms, where we start to get a bit of a reflexive trend in the markets, and we kind of see this a couple of times. We talked about the markets being very oversold here, which they are. Again, starting to see that little bit of that follow through this morning. Futures looking to open a little bit weaker, and that's okay after the rebound rally we had yesterday. A little bit of weakness here, but going into the close today, we have earnings from Microsoft and from Google, which will really set the tone for the tech market tomorrow. So might see a little bit of weakness this morning, but my suspicion is that as the markets are getting fairly oversold here, money flows are starting to turn positive, which is a good indication that we might see some follow through here over the next few days in the markets. So positioning wise, I would expect a rally that will take us back to the top of this downtrend line, right around 43.90 on the S&P index. Again, not a lot of upside. The market still really kind of remains in this downtrend channel that we've been in. And there's still a lot of concern in the markets over inflation, economics. Of course, next week we'll have the Federal Reserve to deal with in terms of hiking interest rates, tapering their balance sheet. Of course, what will drive the markets over the next month or so will really be a lot of what the Fed says. If the Fed begins to talk about, hey, we saw the peak of inflation back in March, we see more kind of deflationary pressures ahead, any type of dovish language will certainly help buoy the stock market here in the short term. If they're much more hawkish, suggesting they're going to continue 50 basis point hikes, they're more wanting to be more aggressive about fighting inflation, that will probably negatively hurt stocks as well. So again, we're definitely not in the all clear situation in the markets, but we do have a short-term tradable opportunity here from an oversold condition. So use that rally as an opportunity to reduce risk in your portfolio, rebalance. We're still in a very volatile market, so this isn't a time to be overly aggressive. Being a little bit more conservative here will help pay off, particularly this summer. And once we get through the Fed and get a clearer picture about monetary policy going forward, we will likely get a better opportunity to rebuild and restructure portfolios accordingly. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.